Years of Young Turks.
Hello and welcome to Young Turks, India's longest running show on entrepreneurships and startups. I'm Shireen Bhan. Now, since 2002, week over week, we've put the spotlight on India's young entrepreneurs, men and women who've been pushing the boundaries to build innovative and sustainable businesses. And we are excited to bring in 2019 with a brand new year with brand new startup stories. So on the show today, we welcome back our Young Turks mentors, Matrix Partners India, part of the Boston-based venture capital firm that manages assets across the US, China and India with a focus on startups in the consumer tech, B2B, enterprise and fintech space. Now, Matrix Partners India has recently raised its third round of $300 million, bringing the total assets under management to approximately $1 billion across its funds. To tell us more about this fundraise and the year ahead, joining us today are Avnish Bajaj, Tarun Davda and Vikram Vaidyanathan. Gentlemen, appreciate you joining us here on Young Turks, and here's wishing all of you at Matrix a very happy 2019. Avnish, let me start by asking you about this fundraise, $300 million. Looks like a great start to the year. What are you going to use the money for?
First of all, thank you for having us, Shireen, and wish you and everybody at CNBC as well a very happy new year. You know, by now, and I think you and I go back 15 years, I'm now jaded, so getting congratulated on raising money is, as somebody told me, getting congratulated on taking a mortgage on a house. Right? You have to pay it back with interest, and in this case, with great returns. But yeah, it's a good start. We've you know, had a good run, I believe, in India as a venture ecosystem. As you know, it's not been an easy journey over the last decade for the entire ecosystem. And I would say, of course, 2018 is going to be remembered for the big kahuna of all transactions, right? The Flipkart-Walmart transaction. But I would say that may miss the probably more important shift that happened in 2018. So we all know about, you know, the underlying factors about the growth, which we can talk about. But I think the real story is not just the one exit, but the multiple number of exits that happened in 2018. A lot of them have been reported, whether Byju's, Swiggy, Ola, you know, a bunch of these. And I think that is what excites us more. So we take we thank our LPs for the support and are excited about the fund in the context of a deepening market and a more mature exits ecosystem.
You know, it's interesting that you highlighted the shift that we're seeing that in the Indian startup system with multiple exits, specifically in 2018. Of course, Flipkart was the big one. But Tarun, let me ask you then, in the context of this fundraise and what you're seeing both in terms of valuations, whether they are in sync or aligned with fundamentals, and also with the returns and the returns expectation given what we've seen in the year gone by.
So I think, Shireen, again, thank you for having us. I think if you look at overall, you know, the Indian venture ecosystem, I think it's really come of age. 2018, you know, will go down as a pivotal year in the ecosystem, largely because of the fact that I think finally there is some proof of the pudding. Yeah, you know, there've been, like Avnish mentioned, there's been a bunch of exits and it's been more broad-based than, you know, most people talk about. But if I look at overall valuations in Indian tech today, in pockets there is definitely some froth, and the reality is Indian, you know, venture overall just works that way. Valuations do tend to run a little bit ahead of reality, but then eventually companies sort of execute and catch up, right? And so Indian e-commerce went through some phase in that, and there were some corrections in the middle, and then eventually, you know, sort of companies either, you know, reach that same valuation or in some cases have even exceeded that valuation. And we're seeing some of that in pockets. You know, if food delivery, you know, people would say that some valuations are ahead of where they, you know, ideally should be. But the reality is that I think, you know, these things do tend to catch up over time. And so our view is that, you know, India will continue. I think 2018 has had the highest number of sort of unicorns created. We believe that this is only start of a much larger trend.
8 or 9 unicorns in 2018. That's companies that crossed $1 billion in valuations. So 2018 certainly was a big year. But let me talk about some of the issues, especially at the end of 2018, that did cloud sentiment in the startup space. And Vikram, let me put that question to you. You know, the ghost of the angel tax returns every few months, and it did again through the end of 2018. How much of a concern is that? What about your own portfolio companies? How many of them have been slapped with an income tax notice?
So yes, it was both I would say an irritant as well as reality in terms of bothering founders as well as angels across the board. The good thing is that overall as an ecosystem as well as a media, there was enough pressure exerted, and actually the government and the regulatory authorities responded and have acted pretty quickly to make sure these things don't come up again and again. I think it's unfortunate, but I think in the larger scheme of things, where we're seeing this new ecosystem come out of nowhere, which is trying to get integrated into the economy as a whole, I think some of these things will come up. As long as we keep acting on these very quickly as a ecosystem, I think we should keep moving forward.
But Avnish, I just want to labor on this point a little bit, because while we've now seen a fresh sort of clarification coming in from the CBDT saying that there should be no coercive action, the fact of the matter is that this is not a new problem. As I mentioned, this issue with angel tax resurfaces quarter after quarter. So the root cause, the fundamental issue, has not been addressed. They've only merely reacted to the pressure that was put by the startup ecosystem and said, okay, let's not take coercive action for now. The issue with respect to the income tax department's view of valuations, that continues to be a cause of concern and a point of friction. So this issue is not going away anytime soon, wouldn't you agree?
Frankly, if you ask me, unintended consequences. When I speak to people on the policy side, they always seem to be very well intentioned, even with this e-commerce policy that came out. They all seem to be well intentioned, and then there's something which is very draconian that comes out. And not just the point you made about CBDT not following up on some of these things. I also read that there was this, you have to kind of certify yourself to be a startup.
Yes.
Right? How do you, I mean, we're just creating more and more bureaucracy. So I think, do I have a silver bullet solution? No. The silver bullet solution is to move from guilty until proven innocent to innocent until proven guilty. Until that mindset shift happens, and to me, the tax buoyancy and a lot of that stuff is showing up, hopefully will lead to that outcome. That's the ultimate outcome, right? Now, along the way, what all can we do? I don't have a better answer than some kind of a certification of a startup, and therefore you don't get, but the guidelines and the guardrails that were proposed as part of Startup India, which is less than 3 years, and this and none of that works. So we have to come up with some kind of self-certification along with an auditor certification, and maybe showing some kind of a RBI filing or something, which is again more in the line of self-certification, which will then give this set of companies kind of immunity from this prosecution. But the ultimate root cause, as the tax terrorism, has to stop.
Well, we've been waiting for that for a while now. I won't hold my breath. But Vikram, let me talk to you about some of the other big shifts that we're seeing. And, 2018 continued with the momentum of video and the explosion that we've seen with video, data consumption, 4G, now talking about 5G, local languages. What do you see as the big trends as we look ahead into 2019? And what would drive or pivot your investments?
I think there are 2 or 3 big shifts that have happened over the last 12 to 18 months. One is obviously the users and how much they're using. And we were just looking at the recent data, and it looks like users are using up to 10 GB of data per month. And what that means is that for the first time, we have a large enough base of users, call it 350, 400, 500 million users, giving up a lot of their time on their mobile, and that time is just multiplying as we speak. Now that time is some of it is going to go to the global platforms, but a lot of that is going to go towards the local platforms. So one of those themes that we're playing on is media and social, and it's two-pronged. One is that there will be lots of different slivers on digital media, whether it is devotion, whether it's astrology, whether it is long-form content, all of which will become meaningful. It's also that there is now going to be a new way of reaching these users, and it's going to be applicable to commerce as a whole. And we think that's going to be a big wave of new commerce startups who are using social media in a different way, who are using long-form media in a different way to reach users, and also provide users a different way of discovering both products and services. So I would say that's sort of one big trend. The second big trend that we are seeing, which is advantageous for Indian startups, is if you look at the before, we never did investments in search or in social media because they were thin stack businesses, and some of the global players, whether it is Facebook or Google, were really good at developing tech and reaching some of these users. But when you look at full stack businesses, Indian entrepreneurs are better at building moats, localizing some of these businesses, like we've seen with Ola, where they're able to build full stack businesses which are transaction led businesses across the board.
Okay, those are the two big trends that you see for 2019. Tarun, you're a big believer also in the social commerce shift that we are seeing play out. But I want to talk a little bit about this constant comparison that we see with India and China. And I would imagine that it's somewhat of an unreasonable comparison given the scale and size of what we're seeing in China versus what we're seeing in the Indian startup ecosystem. But that apart, I mean, the likes of Oyo actually looking global, looking at the Chinese market, making inroads in a big way into a market like China. How much of the Indian startup going global is likely to be a trend in 2019?
So I think it's going to be a big trend, and we're going to see more and more of that. The reality is, startups like Oyo, like you mentioned, is venturing out in China and other countries. One of our startups, Ola, has gone outside India and launched in Europe and Australia and New Zealand. I think the reality is a lot of these companies have reached scale in India. They have got a business model that is working. They have built enough depth in the org where they are able to, now finally venture out and say, hey, you know what, I know the playbook. I've perfected the playbook in India. India is a difficult market for me to execute. It's all of us know the issues around lower transaction size and stuff like that. And now actually the companies are saying, hey, you know what, there is no reason why, if I have the capital that is available, I have the org leadership that that is required to scale this business model. Why shouldn't these companies be venturing out, right? And so we're seeing again good success with Ola's international plans. Oyo has started up. Byju's has been talking about doing acquisitions outside India. So I think it's just a start of a much larger trend that will continue to play out.
Avnish, would you agree with that? And what would excite you the most about this global story that we're likely to see play out?
Well, Tarun is sitting next to me, so I can't really disagree with him, but I will tell you that excites me lesser. So that excites me lesser than winning India. I think we have, the way I see it is that within India we've always competed with the global companies, right? The new breed of global companies is the Chinese companies, so they are also coming after India. So is the next breed of global companies Indian companies? Absolutely. But not at the cost of losing their home market. So I think the only caution I would draw in this is make sure you have your home market sealed up. Don't get complacent about it. And recognize that the Chinese companies are now, the first wave of the internet kind of went to the Americans in India. The second wave, the Indian companies kind of created value. The third wave, where Indian companies are trying to explode in value, we have the Chinese companies coming in. So everybody recognizes that this is the next kind of place where significant value creation will happen. So I think we have to be a little bit more careful on that front. Let me just circle back for a second, Shirin, to the point you asked earlier about content and commerce, if I may. There is this overarching thing, if one goes back to the origin of the internet. The internet was created to disintermediate, right? Guess what happened? The internet created very large intermediaries, $1 trillion companies, Microsoft, Amazon, Google, Apple, Facebook, everybody kind of became close to $1 trillion on the back of the internet. I think what we are seeing as a shift globally, now interestingly on this one, India may be at par with the global trend, is the fact of this mobile instrument in your hand becoming almost a computer, and increasingly a very powerful computer with a lot of data. So you have that going on at the same time, as a result of which video is taking off. Then you have trends like AR, VR. So I almost think of a situation where we are going to move from this intermediaries in the middle connecting people to people connecting themselves. And social commerce is just a starting point of that, right? So almost think of, moving back from the days of modern retail in a shopping mall to a market where I should be able to negotiate directly with somebody, use audio, use video, use all of that. So I think we are in the middle of a very powerful new trend, which for a change we may not be behind in India. We may actually be at par, just given the state of the mobile ecosystem.
Running show on startups and entrepreneurship. We're in conversation with Matrix Partners India. I want to pick on the point that you made there, that you would be a little more cautious on this global story, and you would like Indian entrepreneurs to win in India and ensure that they've got the home market covered. To both of you, and Tarun, let me start by asking you, what is it that you've seen the Indian entrepreneurs do differently in 2018? I mean, in the last 2 or 3 years, there has been a fair degree of a shakeout. I think we've come of age. There has been a degree of maturity that we've seen, and a much more sort of laser focus on the path to profitability as well. What have you seen change with the way founders are approaching the winning formula?
Actually, that's a great question, Shireen. It's something that we talk about a lot internally. So one of the big things, or one of the big shifts that we've seen in the last, I would say, 3 or 4 years is, in the 2013, 14, 15 era, a lot of the companies that are well known today, whether it's Oyo, whether it's Swiggy, whether it's Ola, whether it's, Flipkart, and a bunch of these companies were started by, young graduates with maybe a year or two of experience and who were doing this for the first time, right? And so there was a completely, a playbook that had to be discovered completely off, from ground zero. What we are seeing now is actually, given that, and this is the way venture has, worked in US and China for years, where people who have been part of, building high quality companies and high quality startups, eventually venture out and launch their own startup, right? And so this has been happening in Silicon Valley since decades. It's been happening in China with BAT, where a bunch of entrepreneurs who have built large companies today have had at some point in time worked at one of these large companies, right? India didn't used to have that kind of startup ecosystem until very recently, right? And so I think that the very interesting trend that we're seeing, and it's reflecting in some of the investments we've made recently, is a lot of people who have now worked closely with some of these star founders, have understood what it takes to build and scale startups very rapidly. What it takes to build an organization, what it means to actually figure out a business model with these startups. A lot of them are now having experience that are from a distance and working with these founders, are now venturing out and doing it by themselves. And I think that trend to me is very, very exciting, and we should continue to see significantly higher quality of founding teams off the gates.
What that is also doing, to your other point, is there is a big focus now on creating sustainable businesses. So I am very unashamedly, I've said that when I started Bazi, sale was very much on the selling the company was very much something that if you asked me, I would have said that is very much on the agenda. Today it's very different. So part of it, what Tarun said, you're picking up mid-career executives who have been trained in outstanding unicorn type of environments. They've seen this fast pace. They are playing for the real long term. They are playing the long game, right? And I think that's a big shift. I have started hearing bunch of our companies on record, whether it's Quicker, Ola, Lime, bunch have been talking about profitability, right? As a venture capitalist, obviously it's music to the ears, but even a Kirana store is profitable. So it's not about profitability. It's about value creation. It's about profitability at scale, right? And these companies are executing towards that, which ultimately will lead to IPOs. So, we have crossed the first step of the venture ecosystem, which is exits. But why are the exits coming? The exits are coming because the later stage investors are seeing that you will eventually, these companies are heading towards IPO scale, right? I think that is
but how? I mean, we've been waiting.
Shift.
We've been waiting, Avnish, for a while.
By the founders.
We've been waiting for a while. When do we see this IPO pipeline, so to speak, taking off finally?
You and I have been waiting about the same amount of time, but let me tell you how we think about it. And this is truly something I believe in. And I've told my investors this, that 2-3 years ago, if you asked me, I could not put, and they did ask me, I could not put my hand on my heart and say within the next 3 to 4 years, you will see IPOs of Indian companies.
Okay.
Today, I'm ready to say that. I was actually ready to say that a year ago. And I'll tell you why. The IPO scale comes from, if you look at NASDAQ IPO as a benchmark, and then we can, back into India, because NASDAQ has the most sophisticated investors for this asset class, right? If you look at NASDAQ IPO as a benchmark, you need, give or take, $80 to $100 million of high margin, high growth revenue.
Right.
And with that, you end up with give or take $1 billion company, and hence you have an IPO, right? That until 3 years ago was nowhere on the horizon. Today, I can point to 15 to 20 companies, some of which are in our portfolio, others we have missed and are in other people's portfolio, where I know that those numbers are happening. And those, well, not happening meaning there's a trend line to that.
Right.
Whether it is in calendar year 19 in some cases, in calendar year 20 in some cases, in calendar year 21 in some cases. So it is no longer a hope. This time there is actually on the horizon, one can see it in the execution of the companies, and therefore there is the confidence that 3 years from today, we would look back and say 5 to 7 companies are public. I can, and the reason I feel confident of 5 to 7 is that because I can see 15 to 20 kind of hitting those kind of benchmarks.
Of your portfolio companies, which would you be most confident about IPOing in the next 3 to 4 years? And do you believe an international listing is more likely than an Indian listing?
No. So I'll answer both. International listing I was using as a benchmark because that is the most sophisticated investor pool. If you ask me, and by the way, some of our founders have that pride in wanting to take their companies, like, Reliance created the equity culture in the 80s. This is a new asset class getting created. Why should it get created in India, right? Now, the issue is, I'm not sure the sophistication of the investors is there yet in India for this asset class. So using NASDAQ more as a benchmark, but I think some of it will be structural, but I think it will be 50-50 between companies that will go public here and public there, because some of these are household brand names and they'll get probably more of a premium here than in the US. In our portfolio, and I think the founders will shoot me for it, but whatever. Ola, Quikr, Daily Hunt, M-Swipe, 5-Star. I think these are the 5 that come to mind, top of the mind, which should be going public in that horizon, or will be IPO ready. Some of them may pull the trigger, some of them may not pull the trigger. Multiple factors go into it.
Yeah.
But yes, in that horizon.
Okay, that doesn't look bad at all. As you said, whether they pull the trigger or not is a different question, but you believe that they will certainly be IPO ready, half a dozen or so at least from your portfolio. But Tarun and Vikram, let me come to you now for closing comments. And Tarun, I'll start by asking you the startups that you're most excited about as we look ahead, and the big misses, the startups that you would have liked to invest in but you couldn't.
So startups that we are most excited by, I think, we've spoken about it. Let me, versus taking specific companies, let me tell you broad themes that we're excited by. And I think, that would cover a bunch of companies because some of them are still very young, right? So we spoke about social commerce. I think it's a big trend that we believe in. The reality is that the first 100 million people in India shopped using a search experience, and they use the standard sort of e-commerce models that have worked globally. I don't think the next 300 to 500 million internet users will be shopping online in that model. And so there is going to be a bunch of influencer-led commerce, you may call it, social commerce, you may call it, some form of these, models are likely to achieve significant scale. And so that's, one big theme that we are betting behind. Fintech continues to be a theme that, it has been hot, I would say, for the last 2 years, became, cooled off a little bit in the last 6 months. But long term, is there value creation coming there? We think there's a lot of value creation. Transportation is a space, all of us, feel the acute pain of, commuting in Indian cities. And so, Ola obviously has done a fantastic job in solving that problem. We think there are multiple other micro-mobility plays that will continue to sort of, help make commute easier for the Indian consumer. I would say broadly these are the themes, right, in terms of what we will continue to bet on. There's going to be local language content plays and a bunch of other stuff that we've spoken about already. In terms of misses, I think all the unicorns, the ones that we aren't in, we would have loved to be in. And so, when you look at Swiggy, I think they've done a fantastic job of execution on food tech. If you look at Freshworks, they've done a excellent job in actually proving out that a scalable global SaaS company can be built out of India. So I think there's examples across the board. The reality is, we would have loved to be in all the unicorns. The reality is that's not how it works, but that's what we aspire for.
Tarun, I just want to pick up on that point that you made about micro-mobility plays. Vogo is one of your portfolio companies. Shared along with electric, is that going to be a big trend that that excites you, that you see as a big play in 2019?
I think so. I think if you look at sort of the various use cases and you cut various segments of users as well as the use cases, the reality is what you will see is that there are a bunch of short commute, low value transactions today that are probably not being served in the most ideal fashion, right? And so our investment in Vogo is actually trying to solve that particular use case where somebody is seeking independence, somebody is seeking flexibility, somebody is seeking a point-to-point short distance commute at a reasonable cost, right? And today there aren't too many options that actually serve that use case. And so I think what we will increasingly do is while Ola and Uber have done a great job in solving sort of the generic use cases, I think there are pockets of use cases that are not being served as well. And so there will be a bunch of plays, some of them will be electric, some of them will be through traditional sort of means, but we will continue to see a lot more of these use cases being solved.
Well, Vikram, Tarun and Avnish, thanks very much for joining us here on Young Turks. We wish you and your team the very best of luck. I believe you moved into a new office as well, so wish you all the best for a great new innings there. Thanks, as always, for joining us here on Young Turks.
Thank you. Thank you, Shireen. Thank you for having us.
Well, with that, it is time for us to wrap up this Young Turks special from all of us here on the show. Goodbye. Many thanks for watching.